Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News9 where we break down the day's action on the last rate. And Indian markets, now they have extended their winning run to yet another session in what has been an absolute banger of a start to the March FNO series. I mean, in just 2 full sessions, actually 3 if you count the special session on Saturday when the markets were open for a couple of hours, Nifty has gained almost 550 points from the low. And it's moving deeper and deeper into uncharted territories. Now, despite this sharp rally that we have seen in the last couple of sessions, there are clear signs of caution in the market, and let me try to break it down for you. One, now despite making a fresh record high today in the opening where Nifty scaled 22,440 mark, for the entire day, the index traded in a tight range of about 80 points. In fact, if you look at Nifty's price chart, it has formed a doji candle on the daily price chart, which suggests indecisiveness among market participants. Number two, the broader markets, I mean, they are starting to crack, and if you look at their underperformance, it has been going on for a while. I mean, since the start of February series, the broader markets, especially the mid caps, have been underperforming Nifty in the last month or so. In fact, both mid cap and the small cap indices, they ended February series in the red, and this was a first negative close for both indices since October series. And while some sectors and stocks are outperforming, the rally overall is not as unilateral as it was back in 2023. And talking about unilateral rally, unlike Friday, not all sectors are participating in the upside. Metals, auto, IT, FMCG counters, they all witnessed some bit of a selling pressure today. All these sectors ended with cuts of about 0.2 to 0.8% on Monday, and most of the upside, even if you look at Nifty, is coming from Nifty Bank, and even there are clear signs of exhaustion. Nifty Bank today gained about 0.3%, but could not take out 47,500, which has been a critical hurdle for the index. And we had pointed out this in the morning as well, that the index has time and again reversed course around that 47,500 mark, and even today we could not take it out with conviction. In fact, we ended below it. So if going forward we see another reversal for Nifty Bank and that succumbs to profit booking, you could see some bit of a selling pressure in Nifty as well, because remember, Nifty Bank accounts for about 30 to 35% of the weightage on Nifty. But to understand how the markets are currently positioned, let's also bring on board Mr. Avinash Gorakshakar of Profit Mart Securities. Hi Avinash, thank you for joining us here on News9. And I mean, the March series clearly is off to a cracking start. This pretty much has not been the case historically. March has been historically speaking, a difficult month for us. But overall, we are just about 2.5% shy of 23,000. And given the strong momentum that we have, seen in the markets, despite some bit of a caution the signs of it are visible at higher levels, can we end, the March series at 23K?
Very much possible, Suyash. I think, the sentiment and the narrative on the street is that now, with most of the corporate numbers completely over, now the attention will be on macros and on the news flows coming in from the government on the election kind of schedule and strategy going forward. My sense is that, I think looking at the way the markets are going, I think liquidity is comfortable. Markets are also looking at the fact that the Q3 numbers have come in more or less in line with expectations. I think sectors like capital goods, autos, auto components, cement, real estate, these sectors have been done remarkably well. And I think the management commentaries have also been very solid. They've been quite encouraging. So my sense is that, this is a market where liquidity is going to push up values significantly. And today, as you saw, even the bank Nifty did pretty well. PSU companies like BHEL were up by almost 10 to 12%. So I think markets are now chasing growth, and growth is now going to be the big buzzword. So till the time the elections are not complete, my sense is this market is definitely going to rally even further from these levels, and 23,000 is definitely possible. It all depends on how fast the liquidity comes in. Because broadly, I think, most of the Sensex heavyweights are now market favorites. And I think apart from the small cap, mid cap, even the large cap category of stocks are now attracting the attention of almost all the category of investors like the institutions, the ultra HNIs, the PMSs. So I
Hmm.
would not be surprised this rally will continue, and I think it will obviously be a disbelief to a lot of conservative investors who have actually missed the bus by not buying into this rally.
All right, but are you witnessing any signs of caution in the market right now? Because the broader markets, cracks have started to appear there. They have been largely underperforming the large caps since the last 1 month, and some of these sectors, they are still rallying, but the move is not as unilateral as it was back in just a couple of months ago.
No, I think Suresh, understand one thing, that the base has increased, and I think you're right
Hmm.
in saying that the rally is now going to grow at a slower incremental pace. I think that is one thing which most investors should understand, is that the kind of alpha stocks have recorded, specifically on the small and the mid cap and maybe the SME companies. These are stocks which have multiplied almost 3 times or 5 times,
Hmm.
and that is the reason I think markets are now getting slightly expensive for these kind of stocks. I would not say that the entire market is in a overblown bubble kind of zone, but
Hmm.
yes, you need to be very selective now. I think it's not a time to buy anything and everything unless you get reasonable valuations, good growth, and obviously a kind of a strong visibility in earnings numbers. Only
Hmm.
then I think one can take a call here. But otherwise, I think selectivity is the key buzzword now. You have to be selective. I think although markets are not expensive, there could always be pockets of opportunities where money can be put in.
All right, and speaking of earnings, Avinash, I was reading this report that highlighted that aggregate net profit of Nifty 500 companies that grew by about 20% year on year in December quarter. However, revenue growth was subdued at just about 5.4%, and the bulk of this profitability that came from for India Inc. was on the back of easing raw material costs and as well as energy price. Do you think that the fact that revenue growth is subdued and the profitability that is coming through because of the downturn in the commodity cycle and easing energy prices, does that threaten the sustainable growth in earnings?
No, I think you'll have to divide this question into two parts. Sectors where top line growth has been pretty stagnant or flattish, and
Right.
sectors where the revenue growth has been pretty solid. So I think if you look at sectors like FMCG, for example,
Hmm.
revenue growth has been pretty flat. Margins are also more or less under pressure. So I think clearly it is not depicting the entire market. I mean, if you look at real estate, if you look at capital goods, if you look at auto components, I think revenue growth has been reasonably good. But yes, I think clearly the market should be liking that unilaterally, top line growth should be at least 15 to 20%. And
Hmm.
then only the profit growth could be justified, because on a lower top line base, if the profits are increasing, then the raw material cost benefit is
Hmm.
not going to be sustainable over the longer term. It may continue for maybe 1 or 2 quarters, but thereafter, you need to have the revenue driver as the main key element. So I think, yes, it definitely is a little cautious now. We'll
Hmm.
have to see how things pan out in the next, say, 1 to 2 quarters.
Now talking about how things pan out in the next couple of quarters, anything, sir, that is suggesting to you, any channel checks that is suggesting that this revenue cycle, we are seeing a revival in revenue cycle, or at least we'll see it in the subsequent in the coming quarters?
See, I think one sector where the revenue growth is pretty strong is the two-wheeler sector. If you could have
Hmm.
looked at in the entire auto pack, two-wheelers was one segment which had underperformed significantly. If you compare it with the commercial vehicle, the passenger cars, of course, now tractors are showing negative growth. But if you look at for a very long time, two-wheelers had underperformed. So I think two-wheelers are now getting back into action. If you see almost all the players like TVS Motors, Hero Motor, Bajaj Auto, I think the
Right.
domestic sale volume has increased significantly. So I think
Hmm.
rural markets are now slowly coming up.
Hmm.
Purchasing power is again coming in. So
Hmm.
my sense is maybe in the next 1 or 2 quarters you could see a lot of these sectors which are related to the agri and the rural market, especially agrochemicals, fertilizers, FMCG. These
Right.
could be pockets of opportunities, but you'll have to
Hmm.
wait for 1 or 2 quarters, Suresh, to get a clear kind of certainty in the trend.
All right, pockets of opportunity in rural focus sector certainly, but life insurance stocks, they gained traction today, and this was on the back of reports that suggested that insurance industry regulator IRDAI is likely to consider rationalization of proposed surrender value. And I think for the benefit of our viewers, let's just take a brief moment to explain what surrender value is. Surrender value refers to the cash value that an insurance policy holder is entitled to receive if they decide to terminate or surrender their life insurance policy before maturity or before the insured event occurs. Now, back in December 2023, IRDAI had planned to increase the surrender value paid by life insurance companies to its policyholders by reducing surrender fee charged by these firms. This overall was expected to hit the margins of insurance companies, but now, according to these reports, IRDAI is considering the life insurance industry suggestion to keep the calculation of surrender value the same as for policies surrendered before 5 years, irrespective of the duration of that life insurance policy. Coming back to you, Avinash, a big positive for life insurance companies and their stocks, and we saw it in the price action as well.
So I think, Suresh, definitely price action has happened, but I think the real benefit in terms of numbers could get reflected, probably from the next financial year. And I think you could possibly see, obviously, these companies benefiting, because earlier there were reports that, this change in the surrender value could actually impact the companies negatively. But I think now with the new ruling from IRDA, I think definitely it sounds that, these companies will not, significantly lose out. And I think they will definitely benefit over the longer term. So I think, we continue to be positive on companies like SBI Life, ICICI Pru, Max. Currently, the market has been doing very well for these companies. You could expect a very strong fourth quarter, which traditionally, is supposed to be a kind of a bumper quarter for the insurance companies. So my sense is, I think from a longer term perspective, this is definitely a positive welcome move. And I think it should obviously help these companies, expand their business quite significantly going forward.
All right, and sir, before we let you go, the number of unique investors on NSE recently surpassed the 9 crore mark. In fact, the latest 1 crore only just took 5 months. And while this is broadly a positive, speaks volumes about the inherent strength of our economy, are you at all, concerned about that this new money that is primarily flowing into some of these momentum-driven stocks, high-flying sectors and stocks, could, that be a cause of concern, because by nature, this money lacks conviction?
See, I think, Suresh, understand one thing, that equity has now caught the attention of almost every retail investor. And I think, data points which you mentioned to me now clearly depict the fact that everybody wants to be part of the Indian equity story. Today, if you look at asset qualities like fixed deposits, real estate, gold, I think investors have realized that, there is hardly any alpha element to that kind of asset class. And I think a lot of money has been made in small cap, mid caps, SME companies. So I think all these new investors who are coming in are obviously largely momentum investors. Obviously, they'll have to, take volatility also in their stride. But I think it's a good sign, because that actually, increases the depth of the market, because as more and more investors come in, equity as it is, I was reading some report from RBI that equity as a total, asset class in the entire investment bucket is not more than 5 to 6%. So there's a long way to go in India for Indians to increase their exposure in equity. So I think longer term, yes, they'll make money. In the short term, I think, it's the market sentiment which actually is driving investors, in the equity capital market. So they'll have to, take the volatility also on their stride. But yes, short term, I think they'll have to be careful. I think longer term, you can make money only if you invest wisely and stay invested, in the right companies for a longer period of time.
All right, words of wisdom coming in from Mr. Avinash Gorakshankar for the retail investors, especially those who are getting on the bandwagon just now. Be cautious. Short-term volatility will be there, but long-term, India's growth story speaks volumes for itself. Sir, thank you for joining us here on News9. Always a pleasure speaking with you. But with that, it's a wrap on this edition of Last Check. Stay tuned with us, as we'll be right back with Business Plus.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. life of a goalkeeper is something which has always intrigued me.
When you come into a stadium, this is the highest level of pressure.
When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
A winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Hello and welcome. You're watching Business Plus. We're getting you stories from the world of business, policy and economy. The top story we're tracking at this hour, there is a growing influence of Indian leaders in the corporate world. In a world of tech and innovation, Indian origin CEOs are making significant strides on the global stage. From Sundar Pichai, the CEO of Google, to Satya Nadella, who holds the helm at Microsoft. These individuals have become household names, symbolizing the potential and capabilities of Indian talent on a global platform. But there are a great many recent additions to this very prestigious list. From Neil Mohan, the CEO of YouTube, to Raj Subramaniam, who has taken the charge as CEO of FedEx, showcasing his leadership in one of the world's largest transportation companies. Anjali Sood, leading the online video platform Tubi as its CEO, and Devika Bulchandani, the global CEO of Ogilvy. Indian origin executives are leading tech and IT giants all across the world. What is the leadership template here? Let's discuss that. My colleagues Karthik Malhotra as well as Rakesh Kar here with me in the studio. Good afternoon, gentlemen. Rakesh, it is a story we've been taking about for quite some time now, but once again resurfacing this year when many more names now being added to the list of Indian origin CEOs taking to the global stage.
Good afternoon, Shweta. It's a matter of celebration indeed that, we are adding many more names to the global boardroom leadership. And I'm happy to note that we have, demography, we have diversity, we have inclusion, we have democracy. I'll come to that, how it is reflected in this choice of these leaders. And there is a fair representation of the leaders across business domains. I would have loved to have many more in the non-IT domain. It's still dominated predominantly by the tech piece. It has to get much more diverse. Many more women need to come into the pack. And also, like Manipal suddenly looks grand when we talk of the IT pack. We need many more Indian institutions to throw such names so that they take the top leadership. To my mind, I attribute this very, very sterling quality to three key, very, very distinct attributes of Indian origin, leaders. So I call it SQ, EQ, IQ. Spiritual quotient, emotional quotient, and the intelligence quotient. These are three, the whole world that rules at this stage has IQ, but the SQ and EQ are two very, very distinct Indian identities. And they play in many ways, essentially the world at that level is about navigating conflict. And conflict is inherent to the boardroom. There are, expectations mismatched between shareholders, promoters, and then, CEOs down the line, the leadership. So in that sense, your ability to navigate conflict, navigate expectations is of huge importance. Having said that, I'm looking forward to Karthik's opening words, but I think there is a reason to celebrate, but there's also a limit to celebration. I'll tell you why once we hear Karthik.
Okay, we'll come to the limits of it, but let's take off from where Rakesh left off, and that is, it appears that Indians are dominating more in the IT and the tech space What is working out as far as IT is concerned, and why not other fields or other sectors as well?
I feel, Shweta and Rakesh, I believe that there is obviously a great role of probability in all of this. Now, what happens is, given India's huge talent pool of IT workers across the world, and most Indians who actually migrated overseas in search of work have, give or take, landed up IT jobs, well-paying IT jobs, better quality of life, and Indians by nature and by DNA are not afraid to work beyond the call of duty. I think we've lived in economies of scarce. We've lived, with not too much wealth at the disposal of most Indians, and Indians who have been able to find a job, and more so find a job abroad with a big brand, with a large company, find it incumbent upon themselves to prove their worth. And by way of proving their worth comes extra working hours, longer working hours that they put in, the ability to be able to grab more work, attract more work coming their way, and the base effect that so many IT workers land up in the US looking for IT jobs. I think the base of Indian workers and the mix of Indian workers in the overall employment mix is significantly high, and with the DNA of grabbing, attracting more work and putting in longer hours, good or bad, we don't know. They have a higher probability than peers from other countries to shine in the global landscape, and that, to my mind, ends up more Indian names in CXO ranks across the board and even CEO ranks.
Okay, interesting. So apart from SQ, EQ, IQ, Indians are resilient. Indians believe in working harder and striving to achieve their dreams in a longer span of time, probably by the way of how Indians are made, their DNA, the fact that India has been for a very long time a country which has had scarce resources, as Karthik pointed out. So we had to fight for it, and we continue to do so even when we go out on a global stage. I believe a lot of young people looking into this conversation today would also be wondering why the brain drain. Why can't we hold these leaders back in India and ensure that they lead India into a developed economy?
Fair question. That's why I said there is a limitation to the celebration. I think, Karthik talked about the probability for greater IT inflow, but I was also thinking when he was speaking, if you look at a decadal leadership across business categories, for quite some time, the Exxon Mobils of the world ruled the market cap, the boardroom, the GDP contribution. Now, for quite a foreseeable future and also present, it is led by the IT pack. And within the IT pack, there is a churn. An Alphabet takes over, an NVIDIA comes in. So in that sense, for quite some time, many more